Friends, we've all heard it before. Beat the market? Impossible. They say it's a fool's errand, a quest for the unattainable. They tell you it's a gamble, a game rigged against the little guy. The odds are stacked, the deck is loaded, and the house always wins. But what if I told you there's a simple formula, a proven path to finding great companies at bargain prices? A method that doesn't require a PhD in finance or a crystal ball. That's what Joel Greenblatt's book, The Little Book That Still Beats the Market, is all about. It's a treasure trove of wisdom, distilled into a straightforward strategy. Greenblatt, a Wall Street veteran, shares his secret weapon, the magic formula. This isn't some arcane, complex algorithm. It's a simple, logical approach to investing. It's a straightforward approach to investing that anyone can use regardless of their experience or financial savvy. You don't need to be a financial wizard or a market guru. This ain't about get-rich-quick schemes. It's not about chasing the latest hot stock or trying to time the market. It's about making smart, disciplined decisions that can help you build wealth over time. It's about patience, persistence, and a long-term perspective. The magic formula focuses on two key principles: buying good companies at bargain prices. It's about finding those hidden gems that the market has overlooked. By following this method, you can tilt the odds in your favor. You can make informed decisions that lead to consistent, reliable returns. So next time someone tells you that beating the market is impossible, remember Joel Greenblatt and his magic formula? It's a simple path, but one that requires dedication and discipline. Embrace the journey, stay the course, and watch as your investments grow. The market may be unpredictable, but with the right strategy, you can navigate it successfully. Here's to smart investing and a prosperous future. Remember, the path to beating the market is simpler than you think. The magic formula focuses on two key ingredients: return on capital, ROC, and earnings yield. Think of ROC as a measure of how effectively a company uses its money to generate profits. It's a crucial metric that tells you how well a company is turning its investments into earnings. For instance, if a company invests in new machinery or technology, ROC will show how much profit those investments are generating. A high ROC means they're using their resources wisely, like a savvy business owner. Imagine a business owner who knows exactly where to put their money to get the best returns. This is what a high ROC indicates: efficient and effective use of capital. Earnings yield, on the other hand, tells you how much profit a company makes relative to its stock price. It's a way to measure the return on your investment if you were to buy the company's stock. It's like finding a dollar bill for 50 cents. You want a high earnings yield. This means you're getting more value for your money. A high earnings yield suggests that the stock is undervalued, and you are essentially buying profits at a discount. By focusing on these two factors, the magic formula helps you identify companies that are fundamentally sound and undervalued by the market. This approach allows investors to find hidden gems, companies that are performing well but are not yet recognized by the broader market. The magic formula simplifies the investment process by narrowing down the vast universe of stocks to a manageable list of high-quality companies. It's like having a treasure map that points you to the most promising investments. By consistently applying this formula, investors can make more informed decisions and potentially achieve better returns. It's a disciplined approach that takes the guesswork out of investing, focusing on solid financial principles. So remember, when you're looking to invest, consider the return on capital and earnings yield. These two metrics can guide you towards making smarter, more profitable investment choices. With the magic formula, you have a powerful tool at your disposal to navigate the complex world of investing. Happy investing! So how do you actually use this magic formula? It's simpler than you think. First, you rank companies based on their return on capital. Higher ROC means a higher ranking. Next, you rank them again, this time by their earnings yield. Again, higher is better. Finally, you combine these two rankings to find the companies that score high on both. These are your magic formula winners. Greenblatt suggests building a diversified portfolio of these top-ranked companies and holding them for the long haul. Now you might be thinking, if it's so simple, why doesn't everyone do it? The answer lies in understanding how the market works, or sometimes doesn't work. You see, the stock market isn't always rational. It's driven by emotions, fear, and greed. This can lead to mispricing, where good companies are temporarily undervalued and vice versa. The magic formula helps you cut through the noise and focus on the fundamentals. It's like having a secret weapon to exploit these market inefficiencies and find hidden gems. Section 5. Patience pays off, the long game of investing. Here's the catch, folks. The magic formula isn't about overnight riches. It's about slow and steady growth, about letting your investments compound over time. The market might zig and zag in the short term, but over the long haul, quality companies with strong fundamentals tend to rise to the top. That's why patience and discipline are crucial. Don't panic and sell when the market dips. Stick to your plan and let the magic formula work its magic. Section 6. Proof in the numbers, backtesting, and real-world success. Now I know what you're thinking. Dave, this all sounds great, but show me the money. You want to see tangible proof that these strategies actually work in the real world, not just in theory. Well, the proof is in the pudding. Just like a well-crafted dessert, the results speak for themselves. Backtesting, which is essentially testing the strategy on historical data, shows that the magic formula has consistently outperformed the market over the long term. This means that if you had applied this strategy in the past, you would have seen significant gains. And it's not just a numbers game. These aren't just hypothetical scenarios or simulations. Real-world investors have used this strategy to achieve impressive results. They have seen their portfolios grow and have reaped the benefits of disciplined investing. Real-world investors have used this strategy to achieve impressive results. From individual investors to large financial institutions, the magic formula has been a game changer. Remember, past performance isn't a guarantee of future returns, but it's a pretty good indicator that this thing works. It's important to stay informed and understand that all investments come with risks. However, the historical data and real-world success stories provide a compelling case for the magic formula. So, if you're looking for a strategy that has been tested and proven, the magic formula might just be what you need. It's not a get-rich-quick scheme, but a disciplined approach to investing that has stood the test of time. In conclusion, backtesting and real-world success stories show that the magic formula is more than just a theory. It's a practical, effective strategy that has helped many investors achieve their financial goals. So, why not give it a try and see the results for yourself? Section 7. Investing for everyone. Putting the magic formula to work. The beauty of the magic formula is that anyone can use it. You don't need to be a Wall Street whiz or a financial guru. There are plenty of resources available to help you get started, including online tools and screeners that can help you identify magic formula stocks. You can even find ready-made magic formula ETFs if you prefer a hands-off approach. The important thing is to educate yourself, do your research, and invest wisely. Section 8. Managing expectations and staying the course. Now before you run off and bet the farm, let's be realistic. The magic formula isn't a guaranteed path to riches. It's an investment strategy, and like all strategies, it has its ups and downs. There will be times when the market underperforms and your portfolio might take a hit, but that's where discipline comes in. Remember why you invested in the first place. Focus on the long term, and don't let short-term fluctuations derail your plans. Section 9. The magic formula in action, a real-world example. Let me give you an example. Imagine you'd invested in Apple back in the early 2000s, when it was considered a struggling tech company. Using the magic formula, you would have recognized its high return on capital and its undervalued stock price. Fast forward to today, and Apple is one of the most valuable companies in the world. This isn't to say that every magic formula pick will be a home run, but it illustrates the power of this approach. Section 10. Beyond the numbers, the importance of independent thinking. While the magic formula is a powerful tool, it's important to remember that it's just that, a tool. Don't blindly follow any formula, no matter how successful it's been in the past. Use your own judgment. Think critically about the companies you're investing in. Do your own research. Understand their business models, their competitive landscape, and their long-term prospects. Section 11. The Little Book. That Could a Legacy of Smart Investing is more than just a guide to investing. It's a testament to the power of simplicity, discipline, and common sense. It's a reminder that you don't need to be a Wall Street insider to succeed in the market. With the right tools, the right mindset, and a little bit of patience, anyone can build a brighter financial future. So go out there, take control of your finances, and start investing in your future today.